see. Nope. I'm going to share my screen. There we go. Okay, so what I'm going to do here first is create, just kind of create the formatting for this particular word. So I'm going to merge and center that. Do that a couple times for each heading. I'm going to merge and center that. Copy that over. Do this. So do this. So the first thing we want to do, we want to name the company, right? We have to put the company title first. We'll call this Dave's Hot Dog Stand. There we go. We mentioned what kind of statement this is. So this is an income statement. And let's say this is for the month ending May 31st. So just the month. So for the month ending May 31st. So we've showed the first two thingies, or the first three titles, the company that this covers, the title of the statement, and the time period. Okay, so I'm just gonna quickly put a box or a border around some of these, like that. So now we want to start with our sales, right? So let's look here and find some of our sales, right? We've got our food revenue, we've got our beverage revenue. Let's look around here. And then I see no other revenue. So we put a title here to show that this is kind of our revenue section. We're going to put our food revenue and our beverage revenue and show our total revenue. So our food revenue was how much? It was $145,000. So we put that in. Our beverage revenue in this case was $40,000. So we put it in. There we go. And if we add those together, we get our total revenue, right? In this case, we had two different sales lines that produced $185,000 total sales. Now, the next section here is our costs of goods sold. This is the section, this is part of the first section where we, at the bottom, calculate our gross profit. So our cost of goods sold are costs that are directly responsible for producing food or beverage revenue would be our food cost and our beverage cost. Everything else is either undistributed or fixed. So our cost of goods sold will be our food cost, or sorry, I'll label that better. Cost of food sold and our cost of beverage sold, and then our total cost of goods sold. There we go. I'm just going to make this a bit bigger. There we go. And our gross profit. Our cost of food sold was how much? $10,000. So 1, 2, 3. Our beverage was 9,000. 1, 2, 3. There we go. And so our total cost of food was, just adding them together. Oh. There we go. It's $19,000. So we've come up to our first running profit number, our gross profit. How do we calculate gross profit?
Total revenue minus total cost.
Yes, total revenue minus total cost of goods sold. So we take our total revenue, there we go, minus our total cost of goods sold, and we get a gross profit of $166,000. I'm going to try and make this bigger. There we go. And I'm just going to carry more of these down. So I figure we're going to need some space. There we go. Okay. So now section 2 is coming up. Section 2 is for our undistributed operating expenses. So costs that have been incurred for the general benefit of the business and cannot be distributed to any particular sales line. Okay? These would be things like our salaries and wages, our linen expense, our repairs and administration, not our equipment, utilities, small wares, and our marketing expense. So we have quite a few of them. These costs were incurred for the general benefit of the business. Our linen expense did not help necessarily produce food or beverage revenue, but it definitely, like, you can't attribute it to one or the other. It was incurred for the general benefit of both. Same with salaries and wages. So this would be our operating expenses. And let's begin to list them here. So our salaries and wages. Our rent is undistributed, but it is a fixed charge. Our linen expense. Our linen expense, you know how you have not paper napkins, cloth napkins? That's what a linen expense is. If your workplace cleans your chef jackets and provides them, then those would also be included in linens, as well as cleaning rags, cloths, things like that. Repairs and administration would be an operating expense. Equipment, that is not a cost. Utilities expense, let's assume that that is not fixed. Let's assume it's variable, so utilities. Our interest is fixed. Small wares expense is not. Small wares can include anything from tongs to plates to wine glasses. Other comprehensive income is not a cost, so that comes later. And our marketing expense. Let's say this is not fixed and it is variable. So this would be an operating expense. So our marketing expense. Then we would have our total operating expenses and our operating income. There we go. So our salaries and wages were how much? Here we go, 9,500. There we go. Our linen expense was 400. Repairs and administration were 900. Utilities expense was 1,500. Whew. That's an expensive cell phone bill. Our small wares with 300. Marketing finally was 150. So then we can, after we've listed and put in the balance of all of our expenses, we just add them all up to calculate our total operating expenses. Now, how do we calculate our operating income? This is our second running total profit number.
Gross profit minus operating income.
Yes, it's your gross profit minus total operating costs. So we go to gross profit, there we go, minus total operating expenses. And we get, in this case, a operating income of $153,250. Now we've come to the last section of the income statement. Well, kind of second to last, actually. What is the last or the third section of a multi-step income statement?
Comprehensive.
Sorry?
Comprehensive.
Fixed costs, yes, or fixed charges. So we put fixed cost as the title. Let's go through here and look at our fixed costs. We got depreciation, rent, not a cost, interest expense, and that's it. Nice, actually. So what would be first here? Depreciation. Our rent expense. And interest expense. We can total it up. Total fixed cost. So our depreciation expense was $3,500. What was it? 3,500. Okay. Our rent was 5,000. Our interest expense was 2,000. And we then add them all up to get the total. There we go. Oops. So we have total fixed costs of $10,500. Can anyone tell me how we calculate at this point our net income?
Total operating income plus total gross profit.
Yes, it is your total your operating income minus your total fixed costs or total fixed charges. So we take our operating income right there and we subtract our total fixed costs. In this case, we have a net income of $142,750. As we mentioned up above, this is for the month ending May 31st. I don't think anybody would be upset in making $142,000 a month. However, we haven't calculated any cost percentages. We don't know exactly what this means. Nor do we have any information to compare this to. So it's really hard to make any value judgments here, right? Although we can all agree that we've made profit and that is a good thing. We're not quite finished yet, but maybe I can help answer your question.
Is it like under the fixed cost?
Equipment is an asset, right? So it would be included on a balance sheet. Next, we do have something left over here, and it's called other comprehensive income. So we want to include that. Again, this is a special item. This is a gain or an income that has occurred from something of a non-reoccurring basis. So in this case, we have other comprehensive income of $4,000. This could be me selling my old hot dog cart after buying a new one. Okay, so I've generated a gain, or I've received a gain there. So our next step here would be to put other comprehensive income. There we go. And we're going to list how much it was. In this case, it was 4,000. And our very last step here is to show our comprehensive net income, which, because this is a gain, we add the $4,000. If it was a loss, we would subtract it. So here, sorry?
Which number you had?
The comprehensive, the other comprehensive income. If you wanted to put some percentages in here, we'll just go over here, throw in some of these. Okay, so our food cost is calculated by dividing by food sales. Our beverage cost is calculated by dividing by beverage sales. And then everything else under your beverage cost is just is calculated by dividing by total sales. So we have here divided by total sales. Okay, now if you go in here, you want to keep that all the same if you're putting in these equations, because this way you can click and drag all the way down, and that's always handy. So if we do that, go like this, there we go. Just take out some of the zeros. There we go. And then you'd have to reformat this to percentages. That. And now you see the percentages for each. Okay. You can't really make any judgments about those percentages right now because you have nothing to compare it to. You could compare it to standard if you have one, but right now with no historical information, this is really difficult to do. Does anybody have any questions about the form of the income statement we just created? And did you see how the three sections kind of interact? You have the first section, gross profit, second section, operating income, and the third section is your net profit, net income. Yeah. Because this is prepared in good format. The one in the journal or the worksheet is not prepared in good format.
But this one didn't equal the return card.
Sorry?
He didn't equal the return card.
It is income. Net income is your earnings.
Oh.
It's your profit. Okay. So I'm going to stop sharing this. There we go. Over here. And I will post that